June 3rd. Big day, big show. Want to first start out with, I want to commend everyone for listening to this podcast because I read a great quote yesterday. If you think investing is scary, imagine being broke in retirement. That one hit home for me. If you think investing is scary, imagine being broke in retirement. I want to commend everyone because I think listening to this podcast, my hope is that you won't be broke in retirement. Remember, I want to teach you how I look at stocks. I'm not going to tell you which ones to buy. I'm not going to tell you which stocks are a great buy. If I don't own it, there's a reason I don't own it. If I do own it, there's a reason I do own it. That's what I want to teach you. To understand the reasons that you are going to buy and sell into a stock. I don't want to tell you the specific stocks that you should buy. Sure, I give great tips. It's called Daily Stock Picks, and I give great tips on those. But do I want you to follow me? No, I want you to understand my reasoning. So that's what I'm going to teach you. Again, we're going to go into a lot of stuff. Alpha picks, new pick yesterday, great pick. Why the jobs report on Thursday is going to be big. And one particular analyst said, hey, 255 is the number. I didn't bring it up yesterday, bringing it up today. Chinese tariffs. Are they getting paused? Energy is getting a huge bid. I'll bring out some names on that one. I have a scanner in Seeking Alpha that looks at PEG ratio, which is price to earnings to growth. In fact, AppLovin is one. We'll talk about that one. Vietnam Airlines is going to buy Boeing jets. We'll talk about that. Hams is surging again. Applied Digital up 50% yesterday with a deal with CoreWeave. It's that one we want to look at. NBIS, Hood, Lemonade, Tesla, LVMH, and then some education stuff. There is a great strategy that I found that you can look at that I think is pretty good. But again, I want to commend everybody. Now, you may have just listened to the song that is on the podcast. I say it's an AI market, okay? That entire song was AI. It was a company called Suno. And if you want to do your own music, go and look up Suno. UDO is another one. This top record label is said to weigh licensing music because it's a AI market. And companies are starting to find out that AI is going to control this. The music industry is so tight on their copyright infringement stuff. And trust me, I've been in that world before. I was part of an internet company that essentially when all the downloaded stuff, we would get letters from local DAs and all of the legal stuff. I forget who they'd come from, but we would get letters and I would have to tell them who owned that IP address. That was part of my job at the cable company. I wasn't the one looking it up, but I had to go to legal and say, should I respond to this one? Should I respond to that one? So I understand these music industries. It's big. What's happening now? The top record labels are said to weigh licensing agreements with these. Suno is where I wrote the song for the podcast, and I didn't write it. I basically told it, hey, do a pop punk version of something, and here's the podcast, and it wrote it for me. Okay? But I didn't know if everybody knew the story behind that, but that is the song. And yesterday, I posted a ton of charts at the end. Okay, I do these charts so that you can learn, okay, what is the 4-hour algorithm? If you don't have it and you don't have it in TRENDSPIDER, I post them so you can see them. And that's what these are at the end. That's all the symbols that I do. Costco, PenW, CVX, UTG, Bros, CLE, CLH, Dave, Oracle, Royal Caribbean, Zscaler, Verizon. They all had bullish cross-ups in the 4-hour algorithm that tell me to buy. And so I published it. If you want to see those, let me know. Comment in the newsletter and let me know that you want to see them. If not, or write me an email or comment on Facebook or share the one of the charts on your Twitter, whatever you want to do. But that newsletter is 100% free. And so if the charts aren't needed, I won't post them. That's just it. Now, one thing that is a good thing, we had a new alpha pick yesterday. And it was a top 2025 Seeking Alpha stock pick. So it's a top stock. If you want to see those top stocks, here you go. I mean, I've got literally got a portfolio in Seeking Alpha with them. These are the tools that I use. I set this up. I set myself up for success. And if you look at these year-to-date performers, and again, yesterday, Alpha Picks picked it. They told you why they're picking it. It is one of the big winners from this year so far. And there were 10 stock picks, okay? 10 at the beginning of the year. OppFi up 72% year to date. If you were a Seeking Alpha subscriber at the beginning of the year, you got those picks. You got AGX up 52% since the beginning of the year. LRN up 52% since the beginning of the year. EAT, another alpha pick, up 32%. Urban Outfitters, another alpha pick, up 32%. These are the top 2025 stocks. The top 2023 and the top 2024 up over 100%. So you got these. Okay, there's a couple that aren't performing. DXP, Credo, INTA. Credo we'll talk about. They killed earnings. Killed it. 1 month, they are up 29%. PayPal, INTA. Again, these are stocks that were picked at the beginning of the year that may have slipped. But again, at the beginning of the year, that's where they were. That's another alpha pick. So if you want that alpha pick performance, okay, the alpha pick performance is unmatched. $50 off when you use the link tree, 162% versus 57% during the same time period. It is a great portfolio, and we got a new one yesterday. And what I love about it is they not only give you this summary, but they give you a full description of why they picked it. And again, I point out, if you'd like the bundle for Seeking Alpha, go over to the link tree right here. And it's the bundle. You save $159. And this includes, again, you get the top 2025 picks. You get all of the quant. You get the AI analysis that I will use. You'll get everything for saving $159. Again, whatever you want. I think this alpha pick is a great one. I currently own it as part of the 2025 top stocks. I added more. I trust alpha picks. It's a long-term buy and hold portfolio that has outperformed the S&P. Do I have my entire portfolio in this? No. Should I? Probably. It hasn't performed over the last 6 months, but over time it has outperformed. And Steve Kress is right. During the rebound in April, alpha picks have outperformed. During the last earnings cycle, alpha picks has outperformed. So I also listen to, by the way, another podcast. I listen to many of them. I put my favorite podcast in the newsletter. You can go and look up that newsletter if you want to follow those podcasts. One of them is The Compound. And this is one of the analysts that was on this past weekend. I forget his name. Very Slavic kind of name. But he said, watch the Thursday jobs report. And I stopped it here because he said, watch the Thursday jobs report. If initial jobless claims are over 255,000 on Thursday, he's predicting market craziness with fear. Okay? And he predicts a July rate cut if that happens. So if a July rate cut happens, it may not be for the right reasons. Just understand that. If a July rate cut happens, it may mean that, like in October, when we hit a low, okay, if we go back to October of last year, in August, here in September, when the last rate cut happened, why? It was because the jobs market put a scare into the Fed. If the jobs market is currently putting a scare into the Fed and we get a July rate cut, you may have an opportunity to buy the dip. And I do suggest, if you missed April, buy the freaking dip, okay? Because we've seen the administration do stuff. Microsoft announced 300 more layoffs, according to a report today. So layoffs may be coming. Whenever we see that jobs market tilt, buy the freaking dip. And if you don't know how to buy the dip, my suggestion is not to write to me and ask how to buy the dip. It's to go to AI. I personally use Perplexity. Okay, you'll see me use it later in the show. But I use Perplexity. Go and say, how do I buy the dip? in the market. Just go and have a conversation. The same question you asked me, you can ask AI. And the reason is because AI is far smarter than I will ever be. And it may tell you, I can't give you financial advice, but follow it up. Don't give up. You know, to yesterday's point with the UPS driver who came back because he could still see the package. Don't give up. Keep going. Okay? And that's what Trump is doing. Trump is doing this with tariffs. The U.S. is pushing for best trade deals by Wednesday, the tariff deadline. Okay? They are pushing for the best trade deals. This is going to cause some crazy volatility. I did see some reports, not confirmed, that the Chinese tariffs were paused until August 31st on some goods, which may push the market higher. But Trump is absolutely pushing forward with tariffs. And he's basically telling other countries, don't expect the courts to stop this because I have several ways that I can go about putting tariffs back on. My suggestion, as we start to see volatility, use leveraged ETFs. Learn how to trade these leveraged ETFs. I like them, so I'll be using them. Energy was the big winner yesterday, and I posted this yesterday on Twitter. And if you just go, and literally all I did in FinViz was I went to the screener. Okay, this is free for everybody. This is not something, this is part of the free tools that I've used for years. So before you start getting on me about throwing out, hey, all he does is advertise stuff, this is not paid content. This is a tool that I used to make millions of dollars over the years. Millions. And it's just finviz.com. And all I did was go to the screener in the upper left, and I picked the S&P, and I picked the sector of energy. Okay, yes, Seeking Alpha has better tools, because how did I find out that energy was up? I went over to market data, and I went to key market data, and I just sorted the U.S. equity sectors by today. Okay, you can do them by 1 month, you can do them by 5 days. Again, Seeking Alpha saves you time. And then I went over to FinViz and I sorted it by that. Coterra, Targa, Devon, EQT, Expand, all up 2 and 3%. They were good stocks. Are these ones you want to get into? Maybe. XLE gained over 1%. What are the stocks you want to get into? I would put these into a little reminder, an alert in TRENDSPIDER, whatever tool you use. I think energy is going to start moving. Energy is the new gold. And again, FinViz, it's a very easy site. You can use it. I'm not going to share this screener because all I did was select the S&P and energy. And if you don't know what this stuff means, just float over it. Float over it. It will give you exactly the description. Do the work. Energy is the new gold. Constellation Energy and Meta sign a deal for nuclear power. Pushed Constellation Energy up 10%. I think it was up 15%. This is going to be big for all nuclear. Oklo, SMR, VST, LEU. Go and ask AI, what are nuclear names that I can invest in today? If you don't know the nuclear names, just go and ask. It's very, very simple. In fact, I built this screener in Seeking Alpha because I like the PEG ratio. Okay? I didn't pick the sector. Market cap, I wanted over $100 billion. I want the strong buy, a buyer strong buy. Seeking Alpha analyst, I want strong buy. And the PEG ratio, I want it at 1.18. The PEG rate, the lower the PEG ratio, remember, the PEG ratio does price to earnings versus growth. Go and Google it. Go and you ask AI about the PEG ratio. It's one of my favorites. Okay? And I said, let me find this. Now, I have it sorted by quant rating. This is Seeking Alpha. I like the quant rating. So I have it sorted by that. What's the number one stock? It's AppLovin. Ooh, let's go and look at it's up 24% this year. If you just chart it against the S&P over 1 year, up 385% versus 12% on the S&P. This is an alpha pick, okay? It's an alpha pick. It's still a strong buy in the quant. It has been since $370. So if you just set an alert for this one, for when the quant rating changes, you can absolutely get into this one when it changes. And again, right there at $360, it got in. It's now trading at 401. It's at 402 in pre-market. And you might say, well, seeking alpha, I don't know about that one. Maybe you're a technical trader. So maybe you want the 4-hour algorithm or some other technical strategy. My 4-hour algorithm got you in here at 234. That was just, 41 days ago, you're up 73%. So again, in this market, you can find it. Learn on the free tools. I tell everybody, go and get yourself a charting program. Go and get yourself a fundamental. It can be FinViz. Go and find it. You've got AI. I didn't have AI when I started this. Doing the work, the only reason I suggest these paid tools is to save you time, and it does level you up. TRENDSPIDER, for instance, AppLovin, look at the 4-hour algorithm performance, 1,729% over the last 24 months. Buy and hold, 1,482. It's doing better, even though I would suggest just buying and holding. It wins 63% of the time. You want to know why? Because we'll go into it later. If you just drew a trend line, we are in an upward trend. It's bottom left to upper right. Okay, so it may take the screener that I built to tell you, okay, this is a good stock, and then the chart to tell me, oh my God, it's still in an upward trend. You could have literally made back your subscription fee for both Seeking Alpha and TRENDSPIDER just on this one stock. And remember how I mentioned this back when the tariffs were going on? Back in April, I said, hey, there's going to be two things. There's going to be liquid natural gas, and there's going to be airlines. And Boeing and LNG. LNG is Cheniere Energy. Those are the two that are going to benefit. That was when Boeing was trading at about 160. You're at 212 right now. Don't say I never give you actionable items. I just did. And if you want to see Boeing in the 4-hour algorithm, again, we just went over AppLovin. The 4-hour algorithm on Boeing makes you 67% versus buy and hold is 3.3%. Okay? This 152, you are up 37% in just 53 days. Since that tariff kind of thing came on, and I said, I guarantee you they're going to use Boeing as an investment to lower tariffs. So it's just about thinking these things through. There's a dumb moment. Okay, and one of the dumb moments for me is, why the F did I sell HIMS? HIMS is set to acquire European digital health platform Zava. This expands their reach. It's up 6%. This is a news-driven stock. I like this stock. It's expensive. I don't want to buy it because it's expensive. They're not earning money yet. And their PEG ratio, again, they have phenomenal growth, but they're not earning money. It's not cash flow positive yet. So I'd rather trade it. And during this time, when I would either trade it, I said I didn't want to get out. The algorithm just got you out the 95% gain. I should have gotten out. I'm waiting for it to get me back in. Okay, it makes 265%. I don't want to sit around and hold for a 495. And if we look at a daily chart on this, what are you looking at? You're looking at a pretty good double top right there. Okay, at about $63. Where are you in pre-market? You're at $60.50. The upside to me is not there. Make your decision. Okay, maybe I'm a little bit more advanced than you and I can see this stuff, but you can see the double top on the MACD. You can see the double top on the RSI, and we're coming down. Where do I want to buy this? I want to buy it when the RSI is under 50, when the MACD is closer to the oscillator, okay, and when the 4-hour algorithm gets me in. That's the technicals. The fundamentals on this one don't matter. Other than the growth, the profitability is phenomenal. The momentum, phenomenal. Revisions all up. That's what I like. Now, there was a stock yesterday. I got a question on Spotify a few weeks ago about Applied Digital. Applied Digital, it's not in my core. I don't own it. I don't want to own it. It's never one that I've wanted to look at. You want to know why? APLD, if I look at this one on a weekly chart, what am I looking at? Am I looking at an uptrend or am I just looking at a sideways trend? It's a sideways trend. And yes, when you get down to $2 and $4, maybe it could pop to $10. But they announced yesterday, Applied Digital expects $7 billion in revenue from their new lease deal with CoreWeave. Okay, this is an AI company. Now, Applied Digital is monitored. It is covered by the quant. CoreWeave is not. CoreWeave is actually a recent IPO. But it Applied Digital 50% yesterday. Now, do I want it? I don't think so. The 4-hour algorithm doesn't work on this. You can see it loses you 37%. You make 35% if you buy and hold. It doesn't work. So I don't have necessarily a technical strategy. Is there a reason to actually hold it from the quant? It says it's a hold. I don't think so. I don't like it. The valuation is expensive. They're not making money. Their profitability sucks. A 5% gross margin? That's horrible. Growth? 53% revenue year over year. But again, they're not making money. So do I want it? No. Now, our buddy James Ford wrote an article, and I think he put it perfectly. Applied Digital, this $10 AI stock, just got a $7 billion revenue infusion, but it's still a sell. Why? Because it's spread out over 15 years. So while you're getting that pop in Applied Digital, because I see this weekly, what would be my thing if I own this one? I would sell the news. It's because I don't necessarily have a huge like for it. One thing that I don't like are IPOs. But I read this article yesterday and I said, this might need to be looked at. I hate IPOs, but oh my effing God, this article made me think they won't dilute shareholders. And that's what I'm always worried about with IPOs. I don't know what I don't know. With an IPO, you haven't had earnings calls. You haven't had anything. But look at this. Okay, the 4-hour algorithm got me in at 41. We don't have a lot of moving averages on this chart. You got a 50-day, which is still positive, but it's bottom left to upper right. And since the 4-hour algorithm got you in there, you've made 182%. Buying and holding since the IPO, you've made 200%. But again, that's 66 days. It's 66 days. So I've got to rely on some people that know better than I do. And CoreWeave's business, I didn't believe in it when it was out there. But again, they've just come roaring back. It's basically leasing data centers. And so I always thought, hey, data centers are expensive. These guys are going to have a capital intensive business. They're going to dilute. Maybe they don't. And so that's what I think is coming into play right now. Now, another stock that I've had on my radar is Nebius. They did a $1 billion convertible bond and the market had it down 4%. NBIS, I want this one. This is on my watch list. Did I get it at 21? No, I didn't. Okay, it had it down. It's back up. It's up 1.45%. Am I going to get it? Doesn't have confirmation. Okay, its MACD is still crossing down. The RSI is at 47. Again, I like it when the RSI is down below 50. I'd like it when the oscillator is below, the MACD is below the oscillator. And I'd like it to fill this gap down to 28. And then I will think about it. But NBIS, it's a good stock. Again, it's AI, it's data center. None of these metrics look good at all. Wall Street thinks it's a strong buy. There's only 3 analysts that cover it, so take it with a grain of salt. You know, it's a smaller company than I'm used to like pouring money into, so it will be a small position. I will start the position at a very small pace. $8.5 billion market cap. But everything that I read about it, I like it. Okay, Robinhood. I've talked about this one for the last couple of months. I haven't been able to get into this one. Robinhood may get included in the S&P this Friday. And Sam is playing it with a leveraged ETF, ROBN. Let's see how the algorithm does on ROBN. Well, it does pretty freaking good. Over the last 4 months since it came out, ROBN has gotten you 149% in 3 trades. 3. Versus buy and hold got you 12%. Okay, it's 3 trades. So you win 2 out of 3 times. And you're currently in a winning trade on this one. Now, would I get into this one? I don't think I would, even though you haven't. I think Robinhood is just stretched. In fact, I probably should put this in the levered ETFs to trade. There we go. And we'll just put that in. So you now have this one. You can scan against this one if you want it, if you're a TrendSPIDER subscriber under my program. But again, I don't want it. Sam has made a ton of money, I think, in this one. He's done really well. So I like it. Now, another one that I used to trade that I don't trade anymore is Lemonade. Why don't I trade this one? I got into Lemonade and then I started losing money on Lemonade. So I got out of Lemonade. So if I look at this one from a weekly perspective, you can see it popped. But look at during 2020, this was a huge trade for me. Okay, 2021 marked the peak. And then in 2021, through 2021, it just got killed. There were storms that got it. It's AI insurance. Okay, I got into this one. It's now starting to move back up. We have a 200-day. We've held the 200-day. You can see during 4 weeks, it made 201%. Will we get back up to that 54? Maybe. I mean, look at this chart. They're saying on the daily, if you squeeze your lemons, you're out of that bullish flag, okay? And it's squeezing with the TTM squeeze down at the bottom. You can't see that because it's cut off, but it's right there. See that TTM squeeze? So if you use this, you could literally, just use that TTM squeeze. It's starting to squeeze. Maybe it's on its way up. Go and research it. See if you like Lemonade. For me personally, I will trade it probably on a technical level. One that I think you should buy and hold, and I've said this because I've made this mistake. I currently buy and hold it. But if Elon Musk AI, XAI, merges with Tesla, which Elon Musk, I forget his name, the biographer, he thinks that will happen. He cites the AI vision and Grok integration into Tesla vehicles. I will tell you, I go running at the local high school or the local grade school. They have a track. And I go running every day. It's about 2.5 miles from my house. Maybe, less than 2 miles. It's somewhere in that neighborhood. I don't drive there. My car does. When I get done with my run, I let the car drive me home. It is amazing. And if you haven't scheduled a test drive to try this, go and try it. You can basically test drive a Model Y from the Tesla app. Just schedule it. You show up at the dealership. You don't have to talk to anybody. It opens the damn car door for you. And you can try the FSD stuff. It is phenomenal. It is great. If this happens, I think Tesla's at $500 a share. It is a hype stock. It is not one you hold because the fundamentals are fantastic. It is one you hold because Elon Musk has built several businesses that just continue to grow. And it's not a car company. It is not a car company. I like it under this $300. I like it to get to $400. Do I think you should buy at $346? I think you wait. Want to know why? The 4-hour algorithm has done really well. As this one comes down, there's a gap down here. As this gets closer to 300, I'll start buying again. So one thing, this is great. We talked about dividendology yesterday. He found out that Bernard Arnault is scooping up shares of LVMH. And again, it's interesting. Why? Just go down to the bottom, okay? Peter Lynch. Insiders might sell their shares for any number of reasons. They have to schedule their sales, but they buy them for only one. They think the price will rise. And so LVMHF, let's go look at it. LVMHF, there we go. Right here. Now, is it time to buy? I mean, that's a stock that has just lost its way. Okay, it's getting down to this gap on the weekly, down to 521. They are buying. And if you want to see insider buys, again, you don't need to go to, does it have it here? No, I guess it doesn't. LVM. No, I guess FinViz doesn't have LVMH, even though TrendSpider does. Let's see if the quant does it. LVMH. Yeah, they've got it. They've got it. The quant doesn't cover it, but you can see all the ratings and financials and all of that, dividends, valuation, growth. You can see all that. But again, is that one you want to buy? I don't know. Check it. It might be a foreign stock. I don't own this one. It's not one that I want. I just thought it was great analysis by Dividendology. Okay, now the education portion. This is Tori Trades. I like her. Okay, the reason I like her, she trades on her phone. She doesn't trade like me. Would I ever trade like her? No. Do I have a lot to learn from her? Absolutely. Do I rely just on trend lines? No. Do I suggest you do that? No. But trend lines are an amazing, amazing tool. When you go to a stock and you see a stock that's going upper left to bottom right, and you want to time the bounce, trend lines will help you. And she goes over it here. It's literally like 10 minutes of your time. And if you can learn to draw trend lines, you are beating the majority of people that are retail trading. The only thing that I know about trend lines is it must touch 3 points. The more points than over 3, the more legit that trend line is. Here's her lesson. It's very simple. So if you want to know how to trade, just go to Twitter. You can find tons of these lessons. One that I found yesterday, this is Vincent DeSanio. He made $500 trading in a single year. Most of it came from one A+ setup. Here's the simple system. He breaks it down. What does he do? He literally just looks for a breakdown, and he tells you exactly what it is. And so I went to Perplexity and I said, what's a break and retest strategy? And it gave it to me. It literally gave it to me. TrendSpider has a scanner. So I went to the scanner on TrendSpider for break and retest. And you know what I found? Barclays. Look at this stock in the 4-hour algorithm. It beats buy and hold by 5%. It's a great winner. When you go and look at this, boy, trend line wise, we're looking at a great rebound. Now, do I wish I had this one earlier? Absolutely. Barclays in the quant, it's a strong buy. The valuation isn't even stretched. Yes, you are at 52-week highs. Yes, you are at all-time highs. But it's number 1 out of 66. This is how things can just lead to it. So Barclays, it's going on the watch list. And I want to look the next time this one breaks and retests. So I just found that strategy yesterday. I am making sure that I have this in my notes. I am making sure that this is on my watch. I like this one. It fits all the criteria that I want. And again, thanks to Twitter for finding this. Thanks to Perplexity for explaining it to me. And thanks to TrendSpider for the chart. And thanks to Seeking Alpha for the quick analysis. Literally, that's all I did. And it's on a watch list. I will be buying this one at some point in time. I like it. I like it a lot. I've said it before. I like financials going into the second half of the year. So that's the process. Now, Credo. Credo reported earnings yesterday. This is one of the top 2025 stocks from Seeking Alpha. It's also an alpha pick. They killed it. They killed it. It's up 16%. It is popping, absolutely popping. Okay? That makes NVIDIA, that makes AMD, and that means we have AVGO on Thursday. That's the next one to report. And if you remember the last time that AVGO reported, we'll go over AVGO in a little bit. But let's just look at Credo. It's a strong buy in the quant. Is the valuation crazy? Not after those freaking earnings. Is the growth fantastic? Absolutely. 99% revenue growth year over year. Profitability, they expanded their margin. Okay, momentum, fan-freaking-tastic. 3-month performance up 13%, 6 months up 31%, 9 months up 79%, 1 year up 140%. Revisions, nobody's bringing it down. What does Wall Street think that it's worth? There's 13 analysts. They think it's worth $73. That's 17% upside. Oh, FYI, you're at 73 in pre-market. So if you didn't buy it, just have a wait for it. Be patient. You don't need to chase stuff. Now, I purchased this at 71. I like this one. I think they're going to be raising their price targets. I like it. Did I buy at 40? Absolutely, I bought at 40. But I still have some at 70. So I like this stock. Again, I like it. AMD beat, NVIDIA beat. We have Broadcom on Thursday. Broadcom popped again yesterday, 2%, as it expects it to grow. Those are the earnings that are coming up Thursday. Now, here's the thing. Do you want to go and buy Broadcom? Well, Broadcom's 52-week range is between 128 and 251. You're currently trading at 250. Do you want to risk that somebody's going to pay $252 and make $2 off a $250 stock? For me, if you haven't bought this one, there's no reason to buy it. I have exposure to this in QQQ and several other ETFs. I do want to get back into this. I sold it at 170. But you know who's got the greatest trade on this one? Pelosi. She did an $80 strike price years ago. This was, let's see, back here, July 24. So it wasn't even a year ago. She bought an $80 strike price. I don't know what that means, but I know she's making a shit ton of money. Stock's now pressing new all-time high. She's still holding strong. And FYI, the global semiconductor market set to grow about 11% in 2025. If we just go and look at AVGO, okay? AVGO in particular, is it the top semiconductor stock? No. What is? Rigetti Computer, then Credo, then Poet, then Taiwan Semi, then Astera Labs, then Micron. All of these have strong buys. So you can do that in Seeking Alpha. It's very simple. Again, the chip market is expected to expand. Now, Dollar General, we're in the middle of a tariff war. I didn't think Dollar General had a chance, and they even pointed out, while the company's first quarter financial results exceeded internal expectations, uncertainty exists for the remainder of the year regarding the potential impact of tariffs on the business. I thought that would take this damn stock down. I was wrong. The market is up. This one's up 10%. Why? Well, let's take a look. Boy, this earnings gap right here between 97 and 121, where you're trading right now, 108. 108. They gave good guidance. I mean, that's the thing. I think they just said, hey, hold my beer. We're going to give good guidance and we're going to warn about tariffs at the same time. I don't understand. I have no idea what happened. I'm not a Dollar General shopper. It's not within my wheelhouse, but I'm shocked at it. But the only thing I can explain is that people are looking at this earnings. When we pull back the volume bar here in TRENDSPIDER, and we just pull that back, where are people holding from here? Let's just pull it back before the earnings. Let's see. Give me that damn bar. I hate when it does this. There we go. We're going to pull it back to this shelf right here. There's nobody holding up here. So you've got to ask people. There's people holding up here at top at 122. Those people will absolutely sell the second you get into this gap. There's 102 to 115. There's nobody holding. So you got to build up that volume shelf in there. So one thing I brought up a couple of degenerate things. Here's another degenerate. If you are a degenerate and you want to go full on Bitcoin and you think Bitcoin is the future, here's another idea. Yesterday we said, hey, just take out some credit card loans, 0% APR, and just put it all on Bitcoin. Well, here's another one. MicroStrategy did it with cash. You can do it with your house. Horizon lets you reallocate trapped equity in Bitcoin without monthly payments or new debt. Extract the monetary premium on your home and siphon it into Bitcoin. I don't know anybody that would be, again, this isn't my risk tolerance. There is no way I'm promoting this one. But hey, I'm here to bring you ideas. That's the goal of this podcast. So if you want to take the equity in your home and leverage it on Bitcoin, have at it, degenerates. So what do we have today after close? We have CrowdStrike. Do you want to invest in CrowdStrike? I don't know. I mean, that's a big ask, because when you look at CrowdStrike, we are at all-time highs. All-time highs. It's not like you've gone, down. You're at all-time highs. Again, you're asking somebody to pay more for a stock than anybody in history has paid for CrowdStrike. Now, I own CrowdStrike. I sold 50% of my CrowdStrike at $440. We're at $479. The valuation scares the hell out of me. Okay? Wedbush has greater confidence from recent checks ahead of her earnings. You can look at it. Wall Street, they think it's a $427 stock. It's trading at $479. Again, they think it's a $427 stock. I sold at $440 thinking I'm getting $20 on top of what Wall Street thinks that it's worth. Maybe. Remember, I invested this because a company that's capable of taking down the world last August, and it was under $300 a share. I'm all in. The 52-week range was way down near the $200. That's why I was all in. Am I going in before this? Nah, I'm not interested in that. You got HPE today after bell. You got Dollar Tree tomorrow. Dollar General just reported it's up 10%. Dollar Tree, maybe they have something in their thing. You got MongoDB. Again, the earnings are out there. And I did scan again for stocks that are bullish in the 4-hour algorithm. Like I said at the beginning, I'll put some charts in there. Apple, 201. Do you want Apple at 201? To me, historically, that'd be a deal. With 5% growth year over year, I'm thinking, I don't want it. Berkshire at 502. Do you want Berkshire at 502? This one has just, since its earnings, has been going down. People have been selling. Does the 200-day provide you some support? If we look at a weekly chart on this one, it's still bottom left to upper right. Do you want to buy that one? Again, when you look at Berkshire, I think it's 540 or something. Is their top 542. The quant has a strong buy. It's been a strong buy. Let's see, all the way since 499. So you're getting down to that price where it initially went into the strong buy at 501, and the 4-hour algorithm got you in. Cleveland Cliffs, we saw it yesterday. It popped up. It gets you in at 699. Today you're trading at 714. Again, if you wanted Cleveland Cliffs, I would have said, hey, it was the dumb moment on Friday when steel tariffs went in. That was the dumb moment. Meta, it's up 0.19. It's 672. Do you want to buy in here? Well, I would say you're probably looking at a top around 700. Do you want to buy at 672 when your top is 700? Wait for it to pull back. This 549, that 550 has provided resistance. Didn't really provide support, so I'm not sure where support is. I bought under 500. No, I'm sorry, I bought under 600. I think it was 550. I think around that 550 is where I put a bunch of money in. But we have a 4-hour algorithm entry right here. Again, it's saying it might be going higher. The MACD down near the oscillator, the RSI is at 70. Seems a little bit overbought to me. Long term, I think you'll be fine. MPLX. Entry at 51. Why didn't you get it at 50? Why didn't you get it at 49? This one I hold just for the dividend. 7% dividend. Love it. It has outperformed the S&P. Palantir gets an entry. Again, it's telling us, hey, it might move higher. Roblox at $90. Boy, you see that 44 down there? That was where I was telling people, hey, you can trade this one in this area at 44. You've doubled your money. And it hasn't been that long. I mean, this is just October. Hadn't been that long at all. One sector, that we talked about utilities. Utilities gets a bump up. Okay, XLU. And if you want to investigate XLU, go over to Seeking Alpha. Is it a buy? Well, it's a buy, and the quant says it's a buy. Why? Momentum's B, expenses A+, dividend A+, risk D+. It's because XLU, again, XLU is just, this is for Walters. I mean, it's a dividend kind of thing. But NextEra Energy, huge this year. Well, I'm sorry, it's been huge. Yeah. Hasn't done well at all. I thought NextEra Energy, so much for me being up to date on utilities. But again, XLU, entry in the 4-hour algorithm. It says, hey, we could be going higher. And if you're going to go higher, NextEra Energy better go higher since it's 11% of this freaking ETF. I don't like that one. Southern Company, which is my electric company, again, you're buying at highs here. I don't think that utilities buying at highs. We looked at Constellation Energy earlier. The 52-week, you're 352. Where are you at in pre-market? 352. So do you want to chase that one? I don't think so. I think you wait for the pullback. But energy is gold. That's it. So all of these scans, I pulled up the watch list and leveraged ETFs. All of the scans are going to be in the newsletter. If you have any questions, just hit me up. And if you listen to that embarrassing moment when I said NextEra Energy was a great stock, comment below. Because you can see, I don't prepare 100%. I use these tools literally just to look things up. So if you have any questions, hit me up. Okay, talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.